This is Andrew Stotz of Stotz Investment Research talking about watching the street in Singapore. This product looks at analysts, recommendations, earnings forecasts, and target prices. Let's start with consensus recommendations for Singapore. This chart shows us a bottom-up country relative consensus recommendation chart. And what we can see from this is consensus recommendations on Singapore have gone from buy in the period of 2014 to 2015 to currently sell, a massive fall. Companies with the most positive recommendations, well, one of them is Venture Corporation, VENM, and it's a global electronic manufacturing service company. Analysts expect strong growth in its test and measurement as well as life science segments. Companies with the most negative recommendations, well, one of them is Singapore Press Holdings, which is feeling the tough climate for traditional media and has seen its ad revenue decline. The total revenue has been falling since 2012. Ouch. Let's move on to earnings estimates, and we can see consensus EPS growth estimates versus the actual. And of course, we can see that the forecast is always above the actual. From 2012 to 2015, analysts expected earnings to grow by 6% on average. However, actual EPS fell in 3 out of those 4 years. Companies with the highest consensus EPS growth estimates, well, one of those is First Resources, and it focuses on palm oil from plantations to refinery and processing. Analysts expect the company's refining margins to improve. And companies with the lowest consensus EPS growth estimates, well, one of those also is SCMB, which builds, repairs, and upgrades rigs and platforms used in the oil industry. The poor outlook is due to the weak demand that follows the low oil prices. Now let's finish up with the consensus target price. And here we can see consensus target price expected return versus the actual return. We can also see a widening gap between analyst expectation and the actual that has happened. Consensus target price expected return is now in the double digits. Looking back, the estimated upside hasn't been very accurate though. Companies with the highest consensus target price expected return, well, the top one is Noble Group, which is focused on supply chain. The high upside is explained by a fall in share price of almost 90% in the past 2 years rather than high expectations. Companies with the lowest consensus target price expected return, well, the lowest of this is SMRT, which provides public transport and taxi. Falling revenue, and analysts recommend owners to accept the bid from Temasek, which is the National Sovereign Wealth Fund. Want more of our research? Well, just sign up on our free newsletter at becomeabetterinvestor.net/join.